Hi, I'm Pat-Keon, a research analyst here with Lipper, and I'm here to speak with you about fund flows for the week ended Wednesday, March 26. Overall, we saw net outflows for the week of approximately $1 billion. This marks the second consecutive week of net outflows. In market activity, the Dow Jones Industrial Average had a somewhat muted performance overall for the 5 trading sessions, gaining a scant 0.3% or approximately 50 points. In economic news, we saw some weak housing data come out that was mostly attributed to the harsh winter most of America has been facing. New home sales and existing home sales fell 3.3% and 0.4% for the month of February. Let's take a look at our macro groups now. Equity mutual funds were up $1.7 billion on the week, which marked their 13th consecutive week of positive net flows. Taxable bond funds were up $2.8 billion, which is their 12th consecutive week of net inflows. Muni bond funds saw $300 million leave their coffers, while money market funds experienced net outflows of approximately $3.4 billion. Let's take a closer look at the equity mutual fund category now. As stated previously, they were up $1.7 billion on the week, which was the 13th straight week of inflows. What I found interesting about the week is the lion's share of the inflows were in the non-domestic categories. We saw $1.2 billion flow into these categories, specifically $900 million into international and $300 million into global. This was somewhat surprising considering the geopolitical unrest we're going through right now with Russia. Let's take a closer look at our equity ETF category. Equity ETFs are off $2.1 billion for the week, which breaks a 6 consecutive week streak of positive flows for them. Contributing, the biggest contributors to these outflows were the PowerShares QQQ, which saw $1 billion leave its coffers, as well as the Healthcare Select SPDR and the Industrial Select SPDR, which both had about $510 million flow out. Investors were buying the Financial Select Sector SPDR, which had $910 million flow in. Moving on to taxable bond funds now. As stated before, they were up $2.8 billion for the week, which marked its 12th consecutive week of inflows. The biggest contributor to the inflows this week were the corporate investment grade debt categories, which were up $1.9 billion for the week. Moving on now, taxable bond ETFs saw some inflows. They had positive net flows of $200 million on the week. Investors were buying the iShares 20-year Treasury bond ETF, which had inflows of $262 million. And they were selling the iShares iBox High Yield Corporate Bond ETF, which saw net outflows of $440 million. Moving on to our muni bond funds now. They had net outflows of $320 million on the week, which broke a 6 consecutive weeks of positive flows for them. And the biggest contributors there were the funds in the national muni categories, which saw $220 million leave their coffers. Let's move on to our last category now, money market funds. Money markets experienced their 4th consecutive week of net outflows last week. They were down approximately $3.4 billion. Contributing to this was taxable money markets, saw $2.3 billion leave, and tax-exempt money markets had $1.1 billion leave. Well, that wraps up this week's report. If you're interested in learning more about fund flows, please visit us at our website. That's www.lipperusfundflows.com. Please join us again here next week as we'll be speaking more about fund flows.